welcome back. My name is Zane. So today we'll be having a look at Synthetix. Now, Synthetix is derivatives liquidity protocol. It's the backbone for derivatives traded in DeFi, allowing anyone, anywhere to gain on-chain exposure to a large range of assets. So it's really fascinating what this is. We've got more information available to us on CoinMarketCap of Synthetix. We've got the circulating supply at 114 million, while the max supply at 112, while the total supply is 115. Anyway, it currently stands at 18 US dollars, and that's quite impressive in itself, to be honest. I mean, market cap speaking, 2.1 billion. So at the moment, it's actually impressive where it sits because it sits at the 52 coin in the world based on market cap alone. Now, guys, I'm not a financial advisor. This is not financial advice, but we'll be discussing what it is, what's a token, what's a platform, what, just like get to know it, get to understand this thing fully. So this is the light paper. It's basically a minimized version of the white paper, just to explain to you what Synthetix is easily. So guys, welcome to Altcoin Disrupts. Remember to hit that subscribe button, and you guys can follow us on Twitter as well. Okay, so yeah, let's get this started. So Synthetix is a decentralized synthetic asset insurance protocol built on Ethereum. Right, that's the first thing to get out of the way. So these Synthetix assets are collateralized by the Synthetix network token. So it's locked in the contract, enables the insurance and Synthetix assets. This pool collateral model enables users to perform a conversions between synths directly with the smart contract. Now, avoiding the need for counterparties, this mechanism solves the liquidity and slippage issue experienced by DEX. Now, Synthetix currently supports Synthetix fiat currency, cryptocurrency, long-term and short-term, and commodities. So the Synthetix holders are incentivized to stake their tokens as they're paid a pro rata portion of the fee generated through activities on the Synthetix exchange based on their contributions to the network. It is the right to participate in the network and captures fee generated from the Synth exchange, from which the value of Synthetix token is derived. Trading on Synthetix.exchange does not require the trader to hold Synthetix. That's a good point. That's a good point because a lot of exchanges have different rules, and if you're not used to exchanges like Synthetix, then it can be a bit tricky to like fully understand. So yeah, I've got multiple articles to explain everything. Like I said, they do have like they do have their own marketplace, their own exchange. It's a protocol and platform for launching what is called Synthetix assets. So you can also launch Synthetix assets as well. So Synthetix protocol enables the trading Synthetix assets on Ethereum. So Synthetix are tokens that provide exposure to digital assets such as gold, digital gold, Bitcoin, US dollars, Tesla, and Apple within the Ethereum blockchain. So Synthetix is the utility token of the Synthetix ecosystem. So how to stake Synthetix? You can also stake it as well. So there's lots of things to know about this. So you cannot just stake tokens, but obviously you can also create Synthetix assets. And in other words, you can mint new Synthetix token, new Synthetix assets on the Ethereum blockchain using the Synthetix platform. So they actually go through how you can stake your tokens via this article. So I'll have this article in the description so you guys can check it out if you want and get a proper understanding of how the Synthetix token is work. So they talk about minting and burning, which minting is what we just spoke about, really. You know, based on like how you create Synthetix assets. So the mechanism above ensures Synthetix stakers are incentivized to maintain their collateralization ratio, which is a C ratio, at the optimal rate, currently 750%. This ensures Synthetix are blocked by the backed by the sufficient collateral to absorb large price shocks. Now, that's good. That's good. If the value of Synthetix or Synths fluctuates, each staker C ratio will fluctuate. It will fall below 750%, although there's a small buffer allowing for minor fluctuations. They'll be unable to claim fees until they restore their ratio. This adjusts their ratio by either minting Synthetix if their ratio is above 750%, or burning Synthetix if the ratio is below 750%. So that is interesting in itself. They talk about stakers, debts, and the pool, of course. So they go into a lot of things. They go into the pegging mechanism. They go into what the platform is, which we can actually talk a bit more about this because everyone is interested in these platforms, in these exchanges platforms where you can mint token, stake token, and buy token, right? So why trade Synthetix assets? That's a good question. So that's what we're going to go on from here. So Synthetix asset provide exposure to an asset without holding the underlying resource. This has a range of advantage, including the friction when switching between different assets, from Apple shares to synthetic gold, expanding the accessibility of certain assets and censorship resistance. So yeah, trading on the Synthetix dot exchange provides many advantages over centralized exchanges, and centralized exchanges can have good and bad things about them, as we all know. And order books based DEX. The lack of order books means that all trades are executed against the contract, and that's good. So once a smart contract is set in place, it has to be followed. You got to follow the strict guidelines and the strict agreements. So assets are assigned and exchanges rate through price feeds, supply and oracle, and can be converted using the Synthetix.exchange tab. This provides infinite liquidity up to the total of amount of collateral in the system. Zero slippage and permissionless on-chain trading. So how synths work? So synths are Synthetix assets can trade the price of underlying assets. They allow holders to gain exposure on Ethereum to various asset classes without holding the underlying assets. We've spoken a little bit about that in the previous article. So yeah, synths are backed by the Synthetix network token, as we all know, which is stake as a collateral. And we all know how much is stake as. So how about the system architecture? Because everyone speaks about security, scalability, and privacy, really. So, and synthetic holder can mint SUSD by locking their Synthetix as collateral via the Synthetix smart contract. Now, the step that are involved in holders mints they go into this. They go into the steps that are involved. It does a really good job of explaining everything, including fees that are involved. And like I said, this article on Medium does a great job as well of telling you how to open an account and connect your wallet and how to start staking. So I think you guys got all the tools you need to get help if you're actually interested in this. Now, I'm not a financial advisor, but for the most part, this video is for entertainment purposes. And it is an ERC20 token, if you guys were curious about that, because it is built on the Ethereum blockchain, the Ethereum system. So each synthetic coin is an Ethereum token, which track the price of external assets. For example, each USD token can track the price of the US dollar. Fascinating. So obviously, I've heard of something similar to Synthetix token, um, and I think it works almost the exact same way, but slightly different. And it's actually called Mirror Protocol. And I think I did a video on Mirror Protocol, and essentially that's what they do as well. Is they've got Synthetix assets, and you can actually swap synthetic assets like Tesla, Apple, and it's really really fascinating. But these are tokens. These have nothing to do with the actual companies in real life. It's just mirrored off these companies in real life, but it has no real connection, no legal connection whatsoever. So it's really interesting to see more and more company getting into these asset classes, such as Synthetix and Mirror Protocol. It's very interesting, and I hope to see where this actually goes, because if this keeps on getting bigger, who knows? It might be you might start hearing about these Synthetix assets on the news, similar to how you hear about Bitcoin and Ethereum, always going up and going down. You'll start to hear about Synthetix assets too, because they mirror the real world assets that we have on the stock exchange and companies worldwide. So it'll be interesting how this smart technology develops in the future, and I'm definitely gonna stay up to date. For sure. I'm definitely gonna keep a great eye on this. Obviously, they also talk about building. Harness the deeper liquidity of Synthetix assets to power a new era of financial tools. And they talk about earn rewards by providing collateral to the Synthetix protocol. And many companies do this. It's staking essentially. You buy up a bunch of tokens, you provide it as a collateral to these companies, or to the system, to the protocol, and in return you will get a percentage return. It's kind of like putting your money into a bank account, and essentially you get paid interest. So staking works very similarly. It's almost the exact same, but the only difference is banks are not cryptocurrencies, and cryptocurrencies are not banks. That's a slight difference. But I always talk about whether or not these tokens will 100x. I'm not too sure if Synthetix will 100x. I mean, it has great potential for sure, but I'd say for me it's too early to say if this will 100x. But I do think a coin like this, an asset like this, has a great chance of hitting $100, $200, and $300 in the next 2 to 3 years. I think realistically, it has a great chance of hitting those numbers, and those are still huge profits. Don't forget that those are still some huge profits. Most definitely, still some huge profits. So yeah, I do think it will have big gains in the future, huge profits and big gains. But there's no guarantee, in my opinion, that it will 100x, because 100x is big. That's big. So for me to say it will 100x, it will take a lot of confidence from me. And at the moment, I still don't know where these assets are going to go, where these platforms are going to go in the future, how well they're going to do. So it's kind of hard for me to say if this will 100x. But there is a lot of money to be made. I'm not a financial advisor. This is not financial advice. I'm just giving my personal opinion, and it's for educational purposes. Now, thank you guys for watching. Subscribe, leave a like, and I'll see you guys in the next one.